What if I told you that a private company once became so powerful that it owned an entire country? Not a small island, but a civilization of 150 million people? And what if I told you they did it without firing a single shot in most places? They did it with something far more powerful than cannons. They did it with accounting books. If you want to see how money can literally rewrite history, hit that subscribe button right now, because what I'm about to show you is the greatest financial heist in human history, and most people have no idea it even happened. Picture this. The year is 1700. India isn't just rich, it's obscenely rich. Nearly 25% of everything produced on planet Earth comes from this one region. To put that in perspective, that's like if California, Texas, and New York combined were producing a quarter of the entire world's wealth today. Indian cities are pumping out silk that makes European nobles weep with envy. Their cotton is so fine that Roman historians once called it woven wind. Their spices are literally worth their weight in gold, sometimes more. Ships from Arabia, China, and Europe line up at Indian ports like customers at an iPhone launch. Bengal alone, richer than all of Britain. The entire British Isles couldn't match the economic output of this one Indian region. Now fast forward 247 years. It's 1947. India finally wins independence. But by now, India's share of the global economy has collapsed to less than 4%. Let me say that again, from 25% to under 4%. That's not decline, that's demolition. Where did all that wealth go? Did it evaporate? Did India just suddenly forget how to make money? No, it was transferred, systematically, deliberately, through one of the most brilliant and brutal financial operations ever designed. And here's the wildest part, it was all legal. Let's rewind to 1600. Queen Elizabeth I, yeah, the original one, signs a piece of paper. It's called a royal charter. And with that signature, she creates something the world has never seen before, the East India Company. Now, this isn't a government agency. It's a business, a corporation. It has shareholders, board meetings, quarterly earnings, the whole deal. But here's the kicker. It also has warships and soldiers, and eventually, its own laws. Imagine if Amazon had an army. That's basically what we're talking about. At first, the East India Company is just another trader. They're competing with the Portuguese, the Dutch, and the French for a slice of that sweet Indian profit. They're buying spices, textiles, and gems, then sailing back to Europe to sell them at a markup. But somewhere along the way, someone in a London boardroom asks a very dangerous question. Why are we buying from India when we could just own India? And that question changed everything. 1757. A place called Plassey in Bengal. There's a battle. Well, calling it a battle is generous. It's more like a corporate takeover with swords. The East India Company, with less than 1,000 British soldiers and a bunch of local allies they bribed, defeats the Nawab of Bengal. But the real victory doesn't happen on the battlefield. It happens in the contract signed afterward. The company doesn't just win the fight, they win the taxes. They install a puppet ruler and give themselves one tiny privilege, the right to collect all of Bengal's revenue. Think about that. A private company, not a government, not a king, just got the right to tax an entire region, one of the richest regions on Earth. Within 10 years, the East India Company is pulling tens of millions of pounds out of Bengal every single year. And here's where it gets dark. London is booming. Stock prices are soaring. Investors who've never even seen India are buying vacation homes off Indian tax money. Meanwhile, back in Bengal, farmers can't afford food. Because here's how the system worked. British officials would show up at harvest time and demand tax payments in cash. But these farmers didn't use much cash. They grew food, traded locally, and lived off the land. So to pay the tax, they had to sell their crops, all of them, even the grain they'd saved to feed their families. The company didn't care. Pay up or lose your land. And if there was a drought, tough luck. The tax stayed the same. In 1770, a famine hits Bengal. It's catastrophic. 10 million people die. That's roughly 1/3 of the population. And during this famine, while bodies are literally piling up in the streets, the East India Company increases its revenue collection. They keep exporting grain out of Bengal even as people starve. For the investors back in London, 1770 was a profitable year. Let that sink in. Now, you might be thinking, okay, that's horrible. But that's just old-school colonialism, right? Brutal, but not exactly sophisticated. Wrong. What the British built in India wasn't just theft, it was financial engineering. Let me show you how brilliant and twisted this system really was. First, they destroyed India's industries. Indian cotton was the best in the world. Indian weavers were legendary. But British merchants couldn't compete with that quality at those prices. So what did they do? They banned Indian textile exports to Britain. Then they flooded India with cheap British factory-made cloth, backed by tariffs that made it impossible for Indian weavers to compete. Within a generation, entire towns that had been weaving centers for centuries turned into ghost towns. The weavers of Dhaka, once famous across 3 continents, were out of work. India went from being the world's largest producer of textiles to just a supplier of raw cotton. Raw materials out, finished goods in, and Britain controlled both sides of the transaction. But wait, you say, didn't the British build railways in India? Isn't that a good thing? Oh, they built railways, all right. Let me tell you how. British investors would put up money to build a railway line. The Indian government, controlled by Britain, remember, would guarantee those investors a 5% return every single year. Didn't matter if the railway made money or not. Didn't matter if it was even useful. That 5% was guaranteed. And who paid for that guarantee? Indian taxpayers. So British investors got risk-free profit. If the railway failed, Indians covered the loss. If it succeeded, British investors took the profit. Oh, and those railways? They weren't built to connect Indian cities or help Indian businesses. They were built to move raw materials from inland farms to coastal ports, so they could be shipped to Britain. The railways were extraction highways. Even the gifts were rigged. By the late 1800s, historians start noticing something crazy in the records. An Indian intellectual named Dadabhai Naoroji starts doing the math. He tracks every rupee flowing out of India and compares it to what's coming back in. And what he finds is shocking. Every year, hundreds of millions of pounds are leaving India. Not as trade, not as investment, just leaving. He calls it the drain of wealth. And he's not exaggerating. India is paying for British officials' salaries in India, British officials' pensions after they leave India, the cost of British soldiers stationed in India, the cost of British wars fought outside India, interest on loans taken in London for projects in India. India is literally funding the empire that's colonizing it. Modern economists have calculated the total damage. Between 1765 and 1938, Britain extracted the equivalent of $45 trillion in today's money. That's more than the current GDP of the United States and China combined. Gone. And when you take that much wealth out of a society, people die. Between 1876 and 1902, a series of famines killed over 20 million Indians. But here's the thing. During those exact same years, India was exporting millions of tons of grain. There was food. It just wasn't for Indians. A British official named Sir Richard Temple even argued against famine relief. His reasoning? It would spoil the market. People were dying by the millions, and the concern was market efficiency. That's not cruelty. That's capitalism without conscience. By 1947, India finally wins independence. But the country Britain leaves behind is unrecognizable. Literacy is under 2%. Industries are gone. Millions are impoverished. The economy is shattered. India has to start over. Now, here's the question. Did the system end? No, it just changed clothes. After World War II, the old empires collapsed, but the financial structures they built, those stayed. Today, we call it globalization. We call it free trade. We call it development loans. But the math looks awfully familiar. Poor countries export raw materials. Rich countries sell back finished goods. Poor countries borrow money to pay for it in foreign currencies they don't control. And every year, they pay interest. Developing nations currently send over $200 billion more to wealthy countries in debt payments and profit transfers than they receive in aid. The direction hasn't changed, just the paperwork. The empire didn't invent exploitation, but they perfected the accounting of it. They proved you don't need to invade a country to control it. You just need to control its credit, its trade rules, its currency flow. The empire collapsed, but the spreadsheet lives on. Today's world economy, where wealth flows upward, where profits are privatized and losses are socialized, where entire nations are trapped in debt they can never escape, that system has a blueprint. And it was tested for 200 years in India. So, what's the takeaway? Here's the brutal truth. Extraction is instant. Recovery takes generations.
The British took $45 trillion over 2 centuries. India has been independent for 76 years and is still recovering. You can't just bounce back from that kind of damage. But here's the twist, and it's important. India is recovering. It's now one of the fastest-growing economies on the planet. That civilization that was looted, starved, and broken, it's coming back. Not through revenge, through reinvention. But the scars remain. And the system that created those scars, it's still running, just under new management. Here's what keeps me up at night. If a system rewards taking more than creating, can it ever be fair? If the rules are written by the people who already won, can anyone else ever catch up? The British didn't conquer India with superior firepower. They conquered it with superior accounting. They didn't need to burn the villages. They just needed to control the ledger. And that ledger is still open. Different names, different tools, same formula. History doesn't repeat itself, but the balance sheets, those rhyme. So the next time someone tells you the economy is just the way it is, remember this story. Remember that the world's financial systems weren't handed down by nature. They were designed by people for specific purposes. And one of those purposes was to move wealth from the many to the few. Quietly, legally, and endlessly. The empire fell, but the equation is still solving. If this changed the way you see money and power, do me a favor. Subscribe to Monetary Archaeologist. Because history isn't just old stories. It's the instruction manual for right now. And I'm here to dig it up.